This is our Forex blog for September 30th, 2013, and these are our currency indexes, which show you what each individual currency is doing. In other words, you can see what all the dollar pairs are doing, all the euro pairs. You can see, for example, when a trend line is broken, it's in a downtrend, it breaks the trend line here, and then trends up. You can see when the lower containment bands are hit. Typically, price is going to reverse, just like here in the euro. It's going to reverse. It's going to reverse. And every once in a while, obviously, the trends are so strong. In this case, you can see it went down for another hour, had a nice little reverse, went down a little bit more, and then reversed. And once they penetrate these levels, basically the next wave down typically is where it's going to reverse. It's relatively safe to buy the next wave down, and especially buy the next wave down if it's right near the previous swing. If it's way underneath there, then be cautious and avoid those trades. So basically, how do you use this? It's pretty simple. You buy the strong ones versus the weak and sell the weak versus the strong. For example, let's scroll these back. The dollar, is underneath the previous day's low. It's underneath the hourly right here. And basically you want to sell it versus whatever's strong. The euro is kind of going sideways. You can see the daily, weekly, monthly trend, and that's down. The pound is trending down. However, the daily, weekly, monthly trend is actually still up. So basically you want to be buying the strongest versus the weak. Let's take a look at some of the other pairs. You can see the Australian was trending down, went above its hourly, and made a higher high here, pulled back, found support at the hourly. Pretty decent place to be looking for a buy in the Australian. Ideally, it would have been above the hourly, coming down and finding support here. This one was trending down and it's just reverse trend. But anytime you catch a currency that's just reversing trend, and this looks like a 38% Fibonacci pullback from the lows, it's likely to go up to the upper bands before it reverses. So let's take a look at, it's a little late today. I've been working a long time today on our systems and redesigning the website to make it easier for people to understand how our tools work and to learn them as quickly as possible and trade well using them. Let's go back to the dollar. At 330, this one was starting to come down. The euro was also weak at the time. So basically you could be selling the euro Australian and buying the Australian dollar around 330. You can clearly see the euro was trending down, nice little pullback. You go short right there with your stop above the high. And typically when it starts going down, you just want to kind of eyeball the trend line. And when it breaks that trend line, get out. You can also, if you want, draw a fib off the previous swing. And it never hurts to get out near the fib target. It usually maximizes your profit. You're short around, let's just say 45.05. Your stop is about 10 pips away, and it went down to 55. Nice 50 pip win while risking 10 pips. And really, that's the key to trading. Now we also, as you know, the Australian was strong, the dollar was weak. 330, we're looking to buy this, and you can see it's kind of just slowly drifting up, and it slightly made a higher high here. Not much, not enough to really be significant. I would have preferred it to kind of go up at least 8 to 25 pips above the previous high before pulling back. You can see it's kind of in a little wedge pattern right here. Breaks out, and really the ideal trades are once you have a higher high, you look to buy the pullback. You might have got into this trade right here, went your way a little bit, pulled back, came up here to the highs. I would have probably got out of the trade here with a small win. Broke out, get in again with your stop real close to the highs. I don't like breakouts at the highs unless the market goes sideways at least 2 hours, which just almost meets that criteria. And again, anytime you take a riskier trade like a breakout at the highs, just trail your stop underneath there. And for new traders, most people just want to be told when to buy and sell. So let me just show our FX trade signals on the euro today and cut this blog short because it's so late. So here's our FX Forex blog right here. You can see a sell signal here that worked. These two sell signals kind of generated a little bit, went down about 15 pips. This one here kind of failed, but you get into that trade with your stop underneath here, and typically Once it goes one bar your way, you move your stop up a little bit, so you lose a very little amount here. You're in this trade right here, which was huge, and then you have a bunch of small wins. Most of these, went your way, but you can see it did pretty well with the euro dollar today. The market was so strong that I didn't take any counter trend trades, but you can add our containment bands and kind of get in on your own when they're way above the 2.0 DSP based moving average. If you put DSP on here and 2, typically when it's above that level, you can look for 3 to 5 bar reversals. So basically you have a 3 bar reversal here where you get in with you get a loss, and you have 2 more bar reversal with a wick. You get short again here with your stop above here, and you can see it pull back really quickly, 18 pips, and if you wait in another hour or two, you got another 15 pips out of there. And once the market goes through these containment bands, typically when it goes above the bands again, the counter trend trades are very high probability, because the market's, everyone who was long from before is already starting to exit up here near the highs. They're not expecting it to go up without having a little bit of a pullback first.